Joined in studio now by Matt Chipman. He's the editor-in-chief of the Green Baron Report. Matt, always good to see you.
Good to see you again here, Don.
You know, there's a lot of enthusiasm surrounding the stock market right now because we're getting close to an all-time high on the Dow Jones Industrial Average. I guess my question to you is, does that mean stocks are on solid footing for the rest of this year?
Well, the market typically predicts what's going to happen 6 months from now,
right.
You know, so I think what we're seeing is an improvement in overall numbers to a point where, you know, the market is predicting some good news. However, GDP numbers that were out yesterday were sobering. As we talked about before coming on, there's a jobs number that'll be out tomorrow that, you know, may not be all that fantastic either. I think if you own certain positions in companies that you would want to take some profits on, might be a time to do it. I think we're going to stay in this little uptrend that we've got going on right now for a while. It's extremely positive. My concern last time I was on was the arguments that are going to take place over the debt ceiling.
Right.
I don't think that's over with by any stretch. I think we're, you know, that depending on how far things are pushed each way, we'll have to, you know, determine how that's going to go.
Well, when it comes to the debt ceiling, let's face it, the two sides are about as far apart as aardvark and zebra are in a ddictionary. I mean, it really is pathetic that we can't seem to get closer together on such a significant problem that's going to be facing us. I mean, I saw a statistic where they were expecting that we were going to have something like, $25 million in national debt by the year 2020, and that's unthinkable.
It sure is. It sure is. And you know, the government is going to need to take care of its obligations. You know, interest rates have ticked up slightly. You know, I'm wondering how long we stay down. You know, because if interest rates do start really coming up and getting to be a concern, there could be this disconnect, and then I think the whole thing could unfold. And
I misspoke. I said million. I meant trillion. I mean, there's a huge difference.
Yes.
There's a huge difference. But I mean, $25 trillion in debt is something that you can't even fathom.
Yeah.
Where just a few years ago, you know, we're less than half that. I know that we've talked about a couple of different things. What is the Green Baron looking at going forward? Let's talk about the remainder of first quarter and running into second quarter.
We are going to be getting extremely active. We're coming out with a new stock pick. It's really our first stock pick for 2013, and we're coming out with that on Tuesday. You know, I'd like to suggest people who watch the show to go to our website at The Green Baron, sign up to join. You know, in the past, we've liked a lot of companies. One you've had on last month, which, you know, I maintain a position in, is LIG Assets. There was a little dip in the stock, LIGA, this last few days. Their strategic partnership they signed just before Christmas, take a look at that announcement. It was out on December 19th, 20th. It could generate some significant interest in the company as the properties or commercial properties are brought in.
The Green Baron Report, again, their website is thegreenbaron.com. Matt, your input's always appreciated.
Thank you for having me on.
Take care.